The world is currently in a fresh water crisis. First off, read this disclaimer carefully. We will look at the water ETF. First off, let's look at some interesting movements here in the zeitgeist. Due to the massive riots, one of the biggest moves we saw was in the mass surveillance theme. Yeah, that is a bit spooky. We can find water here. It's under sectors, utilities, water, resources. Distance from 52-week low and 52-week highs. Of all the utilities, it is the best performing in both aspects. It's the Invesco Water Resources ETF. PHO is the ticker. Let's first look a bit at the seasonality. Okay, here is 2005 to 2009. We are currently in June. You can see that August is an especially strong month. That's interesting. Let's fast forward. Here you can see that of the closest months to us, July is a very strong month. That's interesting. That's something to take into account. Then we go to from 2015. Here you can see that July is one of the stronger months. And if we add some additional data, you can see that between this period, July was a very strong month here for PHO. That's very interesting. And we saw in some of the previous periods that the later part of the year was characteristically rather strong. So that's something to just think about. Okay, here you can see some performance data. 6% the last month. Here is the precise name. Let's jump into the charts. Weekly data points. We go all the way back here, super far back. You can see that we have had a relatively consistent uptrend throughout this, at least since the low of the financial crisis. During the plunge, we did form a double bottom. We have rallied off the lows. Water is a huge topic, and it is going to become an increasingly salient topic going forward, which, for all intents and purposes, is bullish for companies in this space. Looking at RSI, we are in the neutral zone. The accumulation distribution line is very bullish. It shows that there's been accumulation throughout, especially recently. The correlation with the S&P 500, it is rather strong, 95%. That does mean that they move together. If the S&P gets into trouble, then, judging by the current correlations, they do move rather closely together. The bulls have pushed above a lot of moving averages. Many actually. Very strong move recently, actually stronger than what we have seen on the S&P 500. That's something to take into account. Let's go to the daily data points. Like that, we are above all moving averages. And you can see here that the 200-day moving average is close to smoothing out and potentially becoming positive. As long as we hold above these levels, then we should be fine. And of course, as I am going to go into, there are unique aspects of utilities generally that are bullish in these very uncertain times. So these are some of the technicals. Let's quickly actually do, what should we do? Okay, let's just do a fib retracement, like that. Okay, so we are quite meaningfully above the 62% retracement. Okay. Judging by the RSI, it is at 64. It is not overbought, but you could make the case that maybe this move was a bit aggressive. We have formed some gaps. meaning some of the fuel might be spent, and that there is a probability of shuffling a bit sideways. Okay, let's have a quick segment about utilities, okay? Okay, they represent what we call basic amenities. Here are some examples of utilities. You have water, which we are looking at today, sewage, natural gas, electricity, and dams. There is some interesting perspectives, and that is to categorize internet and phone reception as modern types of utilities. Because we are seeing that internet and phone reception are exhibiting utility-like characteristics. Though at this point in time, they are not officially thought of as utilities. Here are some sector characteristics and the dynamics. Utility companies, they have usually low beta and good dividend yield. They do outperform in times of gloom, but underperform during booms. They are public service, heavily regulated, and there is quite a few monopolies in this space. Part of the reason is that to become an established player in the utilities space, you require some very significant investments. So there is a very high barrier of entry. And we are seeing the migration to clean energy. Hence, by being invested in utilities, you also get exposure to this trend. Let's look a bit more closely at the ETF. Assets under management is a rather impressive $1 billion US, with a 3 million daily dollar volume. Okay, so let's look a bit at the PE 23, price book 333, arguably a bit extended. Number of holdings 35. But of course, these metrics are a function of the price. Meaning, if there is a big move, like a bullish move, then these will be elevated. And we did see that there was recently a major rotation into the water ETF. And that is something that we expect to happen going forward, is that there will be more rotations. Well, let's actually do some rotation studies here. So let's actually go here, and let's go to the RRG charts. And we will look at the US sectors, like that. Okay. We are looking at the rotations from the lows here, and the relevant ETF in this instance would be the XLU. So you can see here, it is in the weakening quadrant, while tech here is leading the XLK. Okay, so let's see. Let's measure the XLU to see the moves. You can see that here it is entering the lagging quadrant, pointing upwards. Then you see that quite recently it's been pushed into improving, and the question then is whether it's going to actually go into the leading space, because we have seen that tech, which was very strong during the deepest part of the plunge, it has now actually been weakening. That is rather interesting. And XLV, that is the healthcare ETF, and we can see that it is now lagging. So there is generally rotation here, and that's something we should keep our eye on closely going forward. Because when a certain sector becomes overbought, then we do see these rotations. Okay, do we get more data here? Unfortunately, we cannot actually see the companies. I have experienced that ETF.com has actually deteriorated recently. It was really good before, but now there's less data. So let's go to the website. Okay. So they have Invesco has a decent website. Here you can see that the largest category here is machinery. Then you have water utilities at 20%. Yeah, I'm a little bit surprised by... I'm not entirely sure what they mean with machinery here. So this is something we have to explore further. This is one of the issues with ETFs. Some ETFs, they are more about marketing instead of the actual content being reflective of the marketing. And the ultimate marketing is the name. Let's investigate a bit closely. I mean, yeah, it certainly seems like these are basically water companies largely. Okay, so we shouldn't necessarily read too much into this category of machinery. It could be that they're being a bit overly specific here. Okay. Let's quickly look at the S&P 500, getting the pulse of the market. We had, even though the USA is burning down with riots and military in the streets, Wall Street is so utterly disconnected from reality that there was an update yesterday. And I do understand why many of you will be very confused by this, because yes, this does actually not make any sense. The reason why this is happening is because the central bank has told Wall Street that they will print money to help. Meaning we are now in a very dangerous situation in which bad news is good news. Which means that if the economy starts to improve, that could all of a sudden become bearish for the markets, because then there will not be more support. One of the surprises yesterday is that we did see, even though there's been riots, buildings have been destroyed, commercial real estate is suffering like it has ever done. Even though that happened, super bearish, we did see the real estate ETF rally. The most likely explanation is that there is an assumption that because things are bad, it will be easier for the commercial real estate companies to go to the government and beg for money. But of course, long term, the market cannot be disconnected from reality. Short term it can, but at the end of the day, reality always catches up to the market, which is why you have to be very careful. Regardless of whether you are a bull or a bear, you should have a market neutral portfolio. Because this right here is not healthy. And especially now, in which bad news is good news for the market, that is obviously not sustainable. Okay, whatever you do, of course, you want to let the trend be a very good friend going forward. Be very careful in not simply your trading, but even where you walk around these days can be quite dangerous. Yeah, so yeah, be very careful and manage risks.